personally say thank you. I have to tell you that in 1995, my brother and I and a few partners decided to quit our jobs, put second mortgages on our homes, and start an internet service company back in Billings, Montana. And I remember as we traveled the state at that time, having community meetings and talking to people and showing them what the internet was and how it worked. I remember commenting to people that this was going to change our lives. And some folks looked at me and they said, you know, isn't it kind of a fad like CB radio? And as it turned out, it wasn't a fad, thankfully, because I would really be broke. But on the other hand, certainly I think I never dreamed how much it really was going to change our lives forever and beyond. So much to think about and talk about, and I'm sure that we will have many more conversations in the days, months, and years to come. So, all right, on to our next speaker. It is really my pleasure this afternoon to introduce our next speaker. Our next keynote speaker this afternoon is Masamichi Kono, Vice Minister for International Affairs, Financial Service Agencies, Japan. We are honored that Kono-san is able to join us today, as he has a wealth of experience both with FSB and the IIAS. The role of insurance supervisors has never been more critical, and therefore the role of the IIAS has never been more necessary. The United States, as you know, has a very special relationship with Japan, and my own state, Montana, has a long history of friendship and cooperation with Japan as well. Montana and the Kumamoto Prefecture have a sister state relationship, and Senator Mike Mansfield from Montana was the ambassador to Japan for 11 years from 1997 to 1988. In 2014, the NAIC and the FSA formalized our insurance regulatory dialogue, a major initiative to further develop and enhance the mutual understanding of our respective regulatory frameworks. And in fact, last month we met in Tokyo for our third dialogue, thankfully, as just during the cherry blossoms, as they were blooming, and experienced, of course, great hospitality from Komo-san and his staff. And as well, we, the FSA and the members of the NAIC, reinforced the importance of building trust among regulators and strengthening ongoing supervisory cooperation and collaboration between insurance regulators from the two largest national insurance markets in the world. This enhanced mutual regulatory understanding is currently advancing the supervision of cross-border insurance groups. As many of you may know, there are now 12 supervisory colleges in place for insurers doing business in both the US and Japan. And since January 1 of this year, the FSA has been recognized as a qualified jurisdiction by the NAIC with respect to reinsurance companies regulated by the FSA. Consequently, reinsurers licensed and domiciled in Japan are eligible to be certified for reduced reinsurance collateral requirements under the NAIC's credit for reinsurance model law. Kono-san has had a long and distinguished career in financial supervision and regulation of financial services, both in Japan and in the international arena, since joining public service in 1978. He was secretary to the WTO Financial Services Committee between 1994 and 1999 as counselor of the Trade in Services Division, World Trade Organization. He also served 4 years at the OECD Secretariat. He was chairman of the IOSCO Technical Committee from April 2011 until May of 2012, and thereafter served as chairman of the IOSCO board until the end of his term in March of 2013. In his current capacity, he represents the JFSA in various international bodies and meetings and is responsible for coordinating policies relating to international affairs for the JFSA. Japanese Prime Minister Shinzo Abe stated at a joint meeting of the US Congress in on April 29 that we should call the US-Japan alliance an alliance of hope. I fully support those sentiments and hope we can further strengthen the alliance between our two nations and in turn improve the supervision of internationally active groups. please join me in welcoming to the stage Masamichi Kono.
Thank you very much, Monica, for that very kind introduction. And I find it a real challenge to speak after such an extremely interesting speaker, just an hour after lunch, and moreover with a 13-hour jet lag, but you have to bear with me, please. Well, it's my great pleasure and honor to be given this opportunity to deliver my remarks at the NAIC International Insurance Forum. On this wonderful and timely occasion, I would like to just briefly present some of my thoughts on the global regulatory reform for the insurance sector, mainly from a perspective of a national regulator. I must say, any slip of my tongue this afternoon will be my personal responsibility, and the standard disclaimer applies. That is, any views will be my own. As you are probably aware, the IIAS is now in a critical stage of its organizational reform. The IIAS needs to be transformed into a truly global official standard setter and a reference point for global regulation and supervision of insurance. Important work now being undertaken by the IIAS in coordination with the Financial Stability Board and other global standard setters comprise the development of international capital standards for internationally active insurers, the development and implementation of measures to deal with what are now being called as G-size or global systemically important insurers, that includes the development of a methodology for assessing the systemic importance of insurers. This work is going along with measures to ensure higher loss absorbency, or HLA, another acronym of those designated as G-size. And as it was already mentioned today, such work will necessarily continue for a number of years. Insurance regulators and supervisors need to work with insurance groups not only from the viewpoint of policyholder protection, as has been the tradition, but also from the viewpoint of ensuring financial stability. While the systemic importance of insurers and insurance groups would differ widely across jurisdictions and markets and vary from group to group, regulators and supervisors need to heed the lessons of the financial crisis that insurers are not immune from systemic risk and cannot be ignored from the viewpoint of financial stability, very much contrary to that. Against this backdrop, effective and efficient cross-border regulation and supervision of insurance groups have become a necessity as they expand the scope of their businesses both geographically and across a broader range of financial services sectors. And in order to ensure that insurers and insurance groups do not become a potential threat for financial stability and a level playing field is maintained across jurisdictions in which they operate, we must have international standards in insurance regulation and supervision that are credible, that do not distort or create unintended consequences for the financial markets, and which are underpinned by consistent and effective implementation. As a national regulator, we rely on the IIAS to deliver those standards that fit those purposes and will become the global benchmark for fair and effective regulation and supervision. But the IIAS has to have the organizational structure and governance framework that will be fit for the purpose and have sufficient and robust operational capacity to take on this huge task. So this is a great challenge, and this is why I think the IIAS is at a turning point in its existence. In fact, the IIAS needs to be more transparent, more accountable to the public than ever before. Well, under the able leadership of the current and previous chairs of the Executive Committee, as well as the capable and efficient support of the Secretary General and the staff, the IAIS has been transforming itself into a stronger and more accountable international organization. So I would like to commend those people who have been working really day and night to make this happen. As a national regulator, we have great respect for them and have appreciated their work tremendously until today. But we should remind ourselves that the IAIS is a membership organization, a member-driven organization, and that only the IAIS members, including not just the regulators and supervisors, but also the stakeholders of the world, only they could give the credibility and the resources for the IAIS to do a proper job. The standards that the IAIS develops will be just pieces of paper if we do not fully embrace and implement those standards as national regulators and supervisors. This is why I would like to emphasize today that national regulators and supervisors must hold a sense of ownership of those standards and be ready to propose improvements or amendments when needed. We cannot just sit back and stay away and say, oh, the IAS has some standards that do not fit our purposes or our markets, so we will do something different. Such an approach will come back and haunt us, as there will no longer be a level playing field. Now, I can understand there may be views that we should place all our weight of regulation and supervision on the objective of policyholder protection over and above all other policy objectives. There may be concerns that measures to strengthen the financial system could possibly stand in the way or undermine the interests of policyholders. But it has already been mentioned today, and I take heart in that. Let us think that, of course, given this interconnectedness of our financial systems, if the insurers do carry risks that could be a potential threat for financial stability, or if the firm is not resilient enough to weather a financial crisis, no matter where and how it happens, what will happen to the policyholders? I mean, policyholders cannot be immune from the devastation of a financial crisis, for sure. In fact, in the event of a financial crisis, it is always the consumer, the end users of financial services that suffer the consequences. If public funds are called in to bail out an insurance group, the taxpayers may have to ultimately bear the cost in one way or another. I should mention that national regulators and supervisors are deeply aware of this potential serious risk, and this is why we have been supportive of the work at the FSB and the IAS to take the lead in global financial regulatory reform and develop a full range of regulatory measures that will make the financial system resilient and will prevent future crises from inflicting huge damages on the public, while, of course, strengthening measures for policyholder protection. So the dual objectives of policyholder protection and financial stability will have to be pursued in parallel, and they reinforce and complement each other. In terms of global system or global financial regulatory reform, we have come a long way in designing and implementing those necessary measures, but we still have a long way to go, and this is particularly the case in insurance. Now, another point I wish to emphasize today is that the IIS derives its authority uniquely from its members, that is the national authorities, and also from the support and understanding of stakeholders, not the other way around. Each standard that the IIS develops has to be transposed into and made effective by national rules and regulations to be implemented and enforced. So it is particularly unfortunate that sometimes the global standard setters like the IIS are criticized for not being transparent enough or not accountable enough to the public. So the members of the IAIS must work hard to ensure that the transparency and the accountability of their work are not questioned. And the IAIS must endeavor to build consensus around international standards and that are truly embraced by all those concerned. So I take heart in the recent initiatives at the IAIS to enhance transparency, such as to have regular and frequent stakeholder meetings, which effectively substitute for and strengthen stakeholder input, previously provided mainly through the channel of observers. I would like to encourage and support this effort to hold those stakeholder meetings, and we would like the IAIS to hold many more of them. Now, this may be somewhat controversial. I'm aware that there are some questions around the recent decision to discontinue the system of observers. But in my view, the previous system could have actually obscured the nature and the ownership of the standards developed, and therefore could have attracted undue criticism from the global regulatory community or the public as well. So while supporting this organizational change at the IAIS, I would also like to emphasize there should be no misunderstanding that regulators and supervisors are even more committed than before to have full dialogue with our stakeholders in the process of developing standards, not less. The standard setting process has to be streamlined and the responsibilities clarified in order to be more transparent and accountable to the general public. There are now two major strands of standard setting work currently ongoing at the IAIS, which have already been referred to today. One is the work on ending the so-called too big to fail, the G size issue. Now the work is to refine the assessment methodology for the G size and develop additional policy measures applicable to the cohort. This builds on, of course, the previous work to develop the methodology itself for designating the G size. Another piece of work is to develop, for the first time, international capital standards for internationally active insurance groups. And I'll briefly mention my preliminary thoughts on those 2 points from now. First, regarding the G size, if we look back into recent history, in July 2013, in collaboration with the IIAS, the Financial Stability Board identified 9 G size based on the assessment methodology developed by the IIAS. The list of G size was updated in November last year based on latest data, and the list remained unchanged. As you may know, the treatment of reinsurers and financial guarantors have been put on hold during this process. The assessment methodology being refined at the IAS has been applying a higher weight to non-traditional insurance and non-insurance activities. It also views interconnectedness as a critical measure of systemic importance. The design of the methodology is such that those NTNI, so-called NTNI activities and stronger interconnectedness are disfavored, creating incentives and the possibility for insurers to control and, if desired, reduce their systemic footprint. In this regard, I'm supportive of the general thrust of the IIAS methodology in this work. As regards reinsurance and financial guarantor services, they are conducted either by the same entity as primary insurers or insurance, or by independent specialized entities. This has given rise to a certain debate over whether those services should be treated integrally or separately in the methodology for designating GCs or G size. But we must find a solution to this question sooner rather than later. Again, my view is that, in principle, the same activities should carry the same risk weights when assessment is made, regardless of the organizational structure of the insurance group. If reinsurance has a different risk characteristic compared to primary insurance, for example, there needs to be a clear articulation of that specificity, and proper measurement of that risk. I don't think I can go further than that at this moment. As I previously mentioned, in October last year, the IIAS published its final document for the Basic Capital Requirements, BCR, which should form the basis of the higher loss absorbency requirements, the HLA. That is one of the key policy measures applicable to GCs or GSIs. The IIAS is now actively considering the content of this HLA with the aim of issuing a consultation paper next month in June and finalizing it before the end of this year. And in addition, consideration is currently being given to a framework for effective resolution regimes applicable to GSIs, such as the establishment of crisis management groups, CMGs, and the development of recovery and resolution plans, RRPs. Now, from a national regulator's viewpoint, in this context, one important consideration is to design the framework for assessment and designation and implementation process of the framework to be transparent and accountable to our own constituents. The risks need to be measured by an objective scale and be able to withstand the test of time. If data is not immediately available, some practical expedients may become necessary, but caution is warranted in relying upon a small number of indicators, which could only be proxies of the true scales of systemic risk. As there is no reliable absolute numerical threshold for systemic importance, some degree of relative importance and supervisory judgment would need to come into play. But by using a set of indicators and complementing this with the sound judgment of regulators and supervisors, I'm sure that we can have a common methodology which is sufficiently robust and objective to be credible and transparent. And I look forward to a speedy completion of this work. On the topic of HLA, the reasoning behind the higher loss absorbency requirement for GSIs is to take account of the negative externalities caused by their systemic importance and internalize those costs in the form of capital through higher capital requirements. The policy tools applied to GSIs should also enable them to control and scale their systemic activities. And this leads me to think that incentives to reduce NTNI activities, as they're called, should be embedded in the policy measures applicable to GSIs, including in the design of HLA. So much for the first piece of work. Second, concerning the ICS, as I mentioned, this is the first time we are developing an international capital standard for internationally active insurers, and therefore it is a truly groundbreaking piece of work. In December last year, the IIAS released its first public consultation document on the ICS applicable to those IAIGs, as they're called again. And from the end of this April, it began a field testing exercise for the ICS. The aim is to finalize the development of the ICS framework by the end of 2016. Well, what I hear is that in response to the public consultation on the ICS opened last December, as many as 1,600 pages of comments were received. This demonstrates the enormous amount of interest that stakeholders have in this subject. As a national regulator and supervisor, we must play a role in explaining the intentions behind the proposal, and we have to explain it well, and provide feedback to the relevant IIAS bodies for further discussion. So the challenge now is to take proper account of the numerous issues raised in the comments efficiently. However, my hope here is something that I've been repeating in many places, that the required speed or the desired speed does not become an enemy of the good. That is, if we should not, that we should not try to jump to conclusions without taking proper steps to gather the data necessary to make an informed judgment and fully analyze the effects of the new standard on the industry and the markets. The IIAS will need to articulate its positions regarding each of the important points raised in those comments. It has to help national authorities understand the reasoning behind those positions and be able to explain to the public how and when they will be translated into policy actions. Another public consultation is envisaged towards the end of this year, as I understand. The IIS will need to closely engage with its member authorities and with stakeholders to meet its goal. As you may know, in February of this year, agreement was reached at the IAIS Executive Committee on the ultimate goal of the ICS. I think there was some reference to this earlier. As this agreement shows, it is not intended to hastily put together a set of prescriptive standards that will impose a one-size-fits-all for all insurers. It is to have a common methodology that would enable us to achieve comparable, that is substantially the same outcomes across jurisdictions with respect to capital standards. If I interpret it from a national regulator's perspective, different jurisdictions will have different rules, but the aim will be to produce substantially the same results in terms of capital adequacy by developing a sufficiently flexible and robust methodology on an internationally agreed basis. So it is acknowledged that ongoing work is intended to lead to improved convergence over time on the key elements of the ICS, namely valuation, capital resources, and capital requirements. An important point when considering the design of the ICS is a necessity to build a framework which captures the specificities of insurance. This applies to the evaluation of insurance liabilities as well as risk management and the definition of capital. Well, those are all important elements. In this regard, the most critical issues in the first draft public consultation was the comparability of the valuation of insurance liabilities. Currently, two alternatives are on the table, which are the current estimate and the gap plus adjustments, or GAAP plus. Going forward, the validity and robustness of those two valuation methods will be assessed through field tests to see whether comparable outcomes can be achieved. Another important consideration is that a risk-based ICS must not lead to a situation that produces unintended consequences on the availability of long-term insurance contracts or creates undue disincentives for long-term investment by insurance companies. We will need to give some thought to this point, which implicates a number of critical elements in the calculation of capital adequacy for an insurer, both in the numerator and the denominator, and relates to both sides of the balance sheet. With regard to the definition of capital, the loss-absorbing capacity of technical reserves is a key feature of insurance, and due consideration of this capacity in the assessment of capital adequacy is warranted, in my view, within the ICS framework. Conducting sufficient and robust field tests is a critical element in developing in the development process of international standards. Although the purpose of field testing may vary depending on where you are in the development process, ultimately it is there to test the feasibility of implementation of the standard and in assessing the need for any transitional measures or determining the timeline for implementation of the standard. So you can see that this process is absolutely critical to the process for developing a credible and feasible ICS. In this context, I should allude to the regular dialogue that Monica just referred to being held between the NAIC and ourselves. In the most recent meeting we had in Tokyo, we reaffirmed the importance of considering the cost effectiveness of any proposed standard and their impact on the markets, including on insurance product availability and affordability. We also agree that one should be mindful of the compatibility of the proposed standards with the respective insurance regulatory systems of jurisdictions. While I would favor further harmonization of the rules across jurisdictions, the IAIS has to keep in mind that there is no quick and easy route to achieving that in the near term. So this is a journey over time. I think I'll have to conclude very quickly. I have emphasized in my remarks that in an increasingly global insurance marketplace, we are feeling an ever stronger need to make progress in making our rules and standards more internationally consistent and in coordinating our supervisory actions. Coordination and cooperation between authorities of different jurisdictions have become an imperative. Group-wide supervision. Well, today this has been an interesting subject, important one, in my view, has now become a norm. A growing global insurance market must be underpinned by effective regulation and supervision, as I mentioned at the outset, but that has to be globally consistent, well coordinated, and based on a foundation of true mutual trust and confidence between jurisdictions' authorities. On the other hand, any international standards agreed at the IAIS are not applied directly in individual countries. Again, this point was made. As I emphasized, and as it was mentioned, they need to be applied in each jurisdiction after following each jurisdiction's legislative and administrative procedures. There should be no misunderstanding that we are the owners of those standards, not any supranational body. Given the current reality of internationally active insurance groups, it is imperative that consistent international standards be developed and implemented to the extent possible, but it is also necessary to allow for some jurisdictional discretion, paying due attention to the different market conditions and practices of each jurisdiction. Striking the right balance between internationally consistent rules and jurisdictional discretion is a real challenge. Again, there was a mention of this in a panel today. It's a real challenge. In overcoming this challenge, we need to cooperate and coordinate more with our counterparts and partners around the world. So I can assure you that we regulators are committed to strengthening cooperation and coordination with our counterparts abroad. But in closing, we definitely need the understanding and the support for our work from stakeholders like you worldwide. Thank you very much.
Thank you very much, Vice Minister Kono, for those thoughtful and provocative remarks. We are going to adjourn and we'll return at 15:15. Thank you very much.